So I just wanted to give you a few numbers, a few statistics on what is happening in the US market today, the listed companies, and the shareholder base behind it. So, we ran, in the US, institutional investors are required by law to file with the SEC their holdings every quarter. So this is public information, but making sense out of public information is a different story. So we track ourselves the institutional holdings in all the US listed shipping companies quarter by quarter. And when we ran a report and we found out who are the different institutional shareholders of all the 49 shipping companies listed in the US, we came up that today there are 1,200 different investors who are holding shares in US listed shipping companies. The total market cap is almost 21 billion, and out of that, 13 billion is held by institutional and retail shareholders. The difference of 7 billion is, insiders who own, these are not shares that trade very frequently, they are shares owned by management or the founding family. And you have right now 35 analysts who cover the US listed shipping companies. These are analysts who belong to US houses or to Scandinavian houses, so 35 analysts in total covering the shipping industry listed in the US. As you can see, I tried to give you an idea of the total institutional exposure to shipping today. And as I mentioned, you have 49 companies. The market cap is 21 billion. 13 billion of that is held by investors, and Bloomberg is the source of that. Then there are a number of preferred equity shares trading on the stock exchange. You have 22 different numbers of 22 different issues. Some companies have more than one. So there are 22 issues with $1.8 billion. And then when you go to the bond market, you have 72 issues. Some companies, again, have more than one. And you have about $19 billion outstanding. And I'd like to credit Ben Nolan, if he's in the audience, for this report. So here you see the complete institutional exposure to shipping. It's 20 billion in bonds, 2 billion in preferred equity, 22, and 14 billion in common equity. To give you an idea of who is holding what, I said it's 21 billion market cap. The float is 14 billion, and out of that float, part of it is held by institutional investors and part is held by retail investors. And that shows you the increasing importance of retail investors as shareholders in shipping stocks. This is not tremendously surprising in the US. In a normal day, almost 50% of the volume in the market comes from retail investors. So you can see here evidence of that. They are big shareholders in shipping companies. These are the 10 largest institutional holders, again, based on the 13F filings, the public information. This does not include several holdings that they may have in non-US listed companies. For example, Bornozis owns Diamond Shipping. He has a number of other holdings in non-listed companies, so the ultimate exposure of these companies may be bigger if you include the non-public shareholdings. But that gives you an idea of the 10 largest investors. If you look at the shipping industry, the total market cap in the US is 24 trillion. 332 billion of that is transportation. Transportation is airlines, trucking, railroads, and shipping. And out of the 332 billion in the transportation sector, in terms of market capitalization, shipping represents a bit less than 10%. It's 21 billion. So down you can see in the pie chart the various percentages. So shipping is 6% of the transportation sector, and it's a minuscule percentage of the overall market cap. Now, if you look at the breakdown by sector, you have 6 container companies, 16 tanker companies, 14 dry bulk, 10 in LNG, LPG, and 3 with mixed fleet. And within those, you also have 10 MLPs. So the MLPs may be in different sectors, LNG, LPG, tanker, dry bulk. So this gives you an idea of the market cap. I mean, look, obviously we all know, unfortunately, that dry bulk sector is going through a very hard time right now. Look at the, you have 14 dry bulk companies with an aggregate market cap of only 800 million. On the other hand, you have tankers with 16 companies, a market cap of 9 billion and a float of 7 billion. Now, if you look at who is holding what, you can see how much is held by institutions and how much is held by retail investors in each particular sector. In the dry bulk, you see a bigger percentage owned, and also in the containers by individual investors. And of course, in MLPs, and I will go in that later. Actually, when stocks trade below $5 per share, a lot of the institutions do not have a hard time including those stocks in their portfolios. So inevitably, you migrate to a different level of institutional holdings and to retail investors who do not have such restrictions. These are the MLPs, and I think the capital raising panel is going to talk about the MLP market. Very tough market right now. But there are only 10 MLPs in the maritime sector out of 145 MLPs. Most of them are energy related. Out of the 10 MLPs in the maritime sector, the float is 3.3 billion. Most of the float, I mean, most of the shares are floated to third investors, as they should be, because they distribute to a wide range of public, retail, and institutional investors. Here, if you look at the MLPs, you can see again how much is held by institutional investors and how much is held by retail investors. This will show you the average trading volume per stock per day. Again, there's only one stock that trades more than 1 million shares per day. And then you have 8 stocks that trade between 1 and 4 million shares per day. And the majority, as you can see, of the shipping stocks have a lower trading volume per day. This will show you, we compiled the Capital Link Maritime indices. They are stock market indices. What is different about them is that we take all the shipping stocks, we weigh them by market cap. So that gives you a true, if you want, picture of the market. A number of other indices that are out there, they do not include a number of companies that do not qualify based on liquidity criteria and so on. And given that, they exclude most of the shipping companies, which makes the indices irrelevant. This index, to the extent that it's relevant, includes everybody. So now you can see that the Capital Link Maritime Index, how it trades in comparison to the oil price and in comparison to the overall market. And you can see that it's trading in tandem with the oil price. It follows to some extent the overall market, but definitely it's done much worse. This is the dry bulk stock index compared to the Baltic Dry Index, which our index is a stock market index. The dry bulk index is a freight index. So that shows essentially that the stock market follows the freight market to a large extent. And you can see that here, to some extent, with in the tanker sector, you can see that the Capital Link Maritime Tanker Index has followed to a large extent. Actually, lately, and that's what a lot of the tanker companies are complaining, it has not followed the freight index, which is it's the same trend, but you know, the freight indices are doing much better than the stock market index. And that's it. And thank you for your attention. I just wanted to give you a snapshot and set the background for the capital raising panel. All I wanted to say is that, you know, you have an industry, 49 companies. a lot of institutional shareholders and a lot more now retail shareholders, fairly liquid market. So it's a bit of a challenge now to market the shipping industry in the US, but at the same time, it's a big industry, plenty of investors out there, and what makes the market move, on every trade, you have a buyer and a seller. And at any price, there's always a willing buyer and a willing seller. It's just a question of marketing to the right audience with the right message. And we should never give up. When times are tough, that's when the Greeks were tough, get going. And that's when we need to increase the communication flow. As far as I'm concerned, I think the mistake is when things are getting difficult, that people disappear, and I think that should not happen. Investors, I think, maintain their investment, or they maintain their attention to companies when they know that there's a strategy. If you're not there to communicate the strategy, that's when people get nervous and they disinvest. Anyway, and I will turn it over to the capital raising panel, to the experts.